Well, if one particular industry could claim to be the hardest hit by the pandemic after the travel, the aviation industry, it would most likely be the multiplex industry. Now, most of the multiplexes since April of last year have seen their revenues dwindling down to a trickle, given the fact that number one, in wave one they were not allowed to open their operations at all. Wave two too, similar sentiments, and even while the unlock was going on even last year, significant capping was done as far as their entire operations were concerned, in terms of the number of seats that could be sold to patrons once they came in to enjoy the services. Now, on the back of this particular hit that most of these companies have taken, a lot of the companies have resorted to fundraising. Both PVR as well as Inox Leisure have raised significant funds, and the route that the companies have preferred for fundraising has generally and typically been via the issuance of security or via the issuance of shares. PVR had one round, Inox Leisure too had one round of fundraising that the company already undertook, and very interestingly, it was an ET Now exclusive yesterday where we told you from our sources that the company, which had earlier taken the board approval for raising funds either via the rights issue route or via the QIP route, we understood and we told you yesterday that the company would be raising funds via the QIP route, and we understood that and we told you that the company is looking to raise close to 300 crore via this particular route. We also told you that most likely this particular development would manifest itself pretty soon, and it, as along expected lines, yesterday post market hours, Inox Leisure in a filing to the exchanges said that yes, they had approved and had begun raising funds via the QIP route. We understand and we told you that Edelweiss and Access Capital were managing the issue for this particular fundraising activity that the company was undertaking via the QIP route. We understand that close to 300 crores is what the company is looking to raise, most likely to be used for capital expenditure, and also any future expansion plans that the company may have. It's a significant development, and also remember earlier the QIP route that the company undertook, the fundraising was done at a significantly lower rate. Now we understand that this particular fundraise, the base price is at 315 rupees 0.25 a share. Remember, this particular price is arrived upon using the SEBI formula. So the company now again would be having the funds to go ahead and continue its operations. It's a significant development for the entire multiplex industry, and it will be interesting to see how these companies perform going forward, the kind of recovery you could see in terms of footfalls, etc. These would be the key monitorables for both Inox Leisure as well as PVR, and the kind of unlock trade momentum that these companies can garner.